Hello students, I'm Brenda. I'll be taking you through investment income, and we hope to learn more about the investment income, to know what it is, and to also tackle a question about an investment income. Have ATD. Principles, taxation, investment, income. So, what is investment income? Investment income is an income coming from interest payments, dividends, capital gains, and also collected upon the sale of a security or other assets, and any other profit that is made through an investment vehicle or of any kind. So in the investment income, we have dividends. We know the dividends, which are the distribution, whether in cash or in property, and whether made before or during a winding up by a company to its members or the shareholders. So they get their dividends maybe at the end of a certain period of time or at the end of the year. So for tax purposes, we can always have the cash dividends and the property dividends that the shareholders or the stakeholders of the company usually get. So in the investment income, we want to see how a business or a company can invest in buying certain things for the usage of the employees or the employer. So we have the commodities like computers, we have the telephone, we have the tax, we have the furniture that is used in the business or in the company, and we also have the machines, the processing machines, the non-processing machinery. We also have partitions. We also have the administration that usually is involved in the participation of making the business to be successful or the company to do its work. So in the investment income, we are going to see the investment allowances that are usually occurring in a business or in the commodities used in the company. So my good students, in our investment income, we are going to see what is a qualifying amount. What is a qualifying amount or cost? What is a qualifying amount or cost? What the allowances are? What the allowances are? The allowances. And you are also going to see the what do you call it? We call it residual value. The residual value that remains from the assets or commodities used in the business. So we have the we also have the assets. So from our assets, just here, we are going to look at the qualifying costs, the allowances, and the residual value. So to tackle this, we are going to start with a question. Yes, you are going to start with a question from the CASNEB paper, from our CASNEB paper, so that we understand what the qualifying cost is, the allowances, the residual values, and our assets, how they are, how we usually calculate the investment allowance. Now we have the April 2023 question number 3C, and the question reads: Safi Manufacturing Company Limited started its operation on 1st January 2022, producing soft drinks for the local market. The company acquired the following assets on commencement of its operations. Now the assets are: we have factory buildings, we have plant and machinery, we also have file cabinets, we have motor vehicles, we have photocopier, LCD television, visitors' chairs, trucks and trailers, computers, labor quarters, parking bay, non-processing machinery, calculators, and water pump. Additional information we are given: motor vehicles comprised of pickups to supply soft drinks to the local market. Note 2, the cost of trailers was 1.4 million required. Compute the investment allowance due to Safi Manufacturing Company Limited for the year ended 31st December 2022. Now we are going to do that question. We are going to work it out. Yes, you're going to work it out. We are going to work out the question that we have. Here, what we are supposed to know here in this question, we have some assets which we are going to find the qualifying costs. We are given the costs, so we are going to find our qualifying costs. We also have allowances. We also have residual value. And now we have machinery as part of our assets. We have machinery which always has an allowance of 50%. So at the back of your mind, you should always remember that assets like machinery and the non-processing, the machinery, all the processing machinery usually carry an investment allowance of 50%. We also have furniture. We also have furniture. Let me use the other one. Okay, we also have our furniture. Sorry for this interruption. Our furniture. We also have our furniture here, and it always has an investment allowance of 25%. We have computers and softwares, which has an investment allowance of 25%. No, sorry, our furniture usually has 10% investment allowance, 10% investment allowance. We also have the processing machinery. All machineries are here. We have the processing and the non-processing machinery. We have the processing and the non-processing machinery, whereby we have 50%. We also have the motor vehicle, and it always has an investment allowance of 25%. Yeah, we always have a factory building. We have factory building. A factory building has an allowance of 50%. Factory building, 50%. We have the furniture. We also have the commercial buildings, which is 10%. So what to note here, the furnitures, we have the things like the desks, the file cabinets, which usually have an investment allowance of 10%. We also have computers and softwares at the allowances at 25%. We also have motor vehicles. The investment allowance is 25%. Factory building also, we have 50%, like the whole manufacturing building at 50%. Commercial buildings, we have the likes of the administrator's office, the canteens, the quarters. So they are our commercial buildings, which is 10%. Now, with this in mind, my good students, we are going to tackle our question. And the question, we've already read the question. It's on our minds. And now we are going to start with the factory building. And we are told the company acquired the following assets on commencement of its operation. So it started on 1st January 2022, and the factory buildings costed 29,500,000. So 29,500,000 is the cost of factory buildings. Yeah, you are also supposed to check the additional information if there is an information concerning the factory building. But in our case, we see we don't have any, so we are going to calculate the allowances. We're going to write our factory building for there. Then we have qualifying amount or qualifying cost. Then we are going to calculate our allowance, investment allowance. Then we will have factory building, qualifying amount, investment allowance, then the residual value. So this is going to be in shillings. Let's put the zeros. Yeah, the factory building. We have here our factory building. And we are given our qualifying amount is 29 500,000. 29,500,000. And our investment allowance is 50%. We write 50% up there. So 50% of this amount, we are going to calculate the 50% of 29,500,000. We are going to calculate 50% of 29,500,000. So our answer is 14,750,000. We also have the residual value. We have 29,500,000. We less 14,750. We will get our answer 14,750,000. So here, let's check whether the factory building has another one quoted. The factory building, we don't have any factory buildings anywhere again. So this will be our investment allowance. So you double cross. This is your investment allowance. This means that your answer is here. Now we are going to commercial buildings. Commercial building. Commercial building. Yeah, let me just use one column. The one columns to write our assets. We have the commercial buildings. We have the qualifying amount, and our investment allowance is supposed to be different. Investment allowance for commercial buildings, just like you've said, commercial buildings is 10%. So we will write our 10% here, our qualifying amount. Our shillings are quoted with zeros. Then we have our residual value. Residual value. We'll also put the shillings, the zeros. So our commercial buildings, the commercial buildings that we have the labor quarters. We have the labor quarters at 3.6 million. 3.6 million labor quarters. Yeah, we don't have any other commercial buildings with us. We have the labor quarters. Yes, write the labor quarter. Labor quarters at 3,600,000, which is our qualifying amount, and our 10% of this one, 10% of the qualifying amount, we are going to get 36,000. We are going to get 36,000. Okay, we are going to get 36,000. The investment allowance, this 36,000, which is our investment allowance, 36,000. We take our 3,600,000. We less 36,000. We less 36,000. And our answer will be 3,564,000. This is our residual value. So the labor quarter, investment allowance is 36,000. So we head on to our next asset. We have the machinery. We have our machinery. We have start with the processing machinery, plant and machinery. We have plant and machinery, plant and machinery, plant and machinery, plant and machinery, plant and machinery. We have the qualifying amount is 12.8, 12,800,000. We take the 10% of this amount, we get which is 10% here. 10% of this amount, 10%, we are going to get 128,000. 128,000. This is our investment allowance. Should also calculate the answer from there. We are also going to see whether we have another machinery. We have the non-processing machinery. Non-processing machinery. Non-processing machinery. Non-processing machinery. It has a qualifying amount of 2 million. 2 million. Qualifying amount is 2 million. 2 million. Then our 10% of 2 million, we have 20,000. We have 20,000. 20,000. Then we less. This is our investment allowance. We less the 2 million. Now we will get 1,900,000. Let's just calculate. 2 million. We less 20,000. 1980,000. 1980,000. So 20,000 will be our investment allowance. We also have some kind of machinery, which is the water pump. We also have our water pump at 12,80,000. Water pump is still a machinery. Water pump at 12,80,000. So 10% of 12,80,000, we get 12,800. 12,800. 12,800. 12,800, which is our investment allowance on water pump. So here we will also find the calculation of the residual value. You as a student, you need to find the residual value. You take this, you less all this. Yeah, you will less the investment allowance from the qualifying amount. You get the residual value. Now let's find some space. Let's find some space so that we continue with our investment allowances. So as a student, you need to be very keen. You need to be very keen. At least you know the qualifying amounts and the investment allowances for any asset included in the company or the business. So we have our next. We have motor vehicle. We have any other machinery we see? There's none. Let's go for motor. Let's calculate the motor vehicle. Hope we can see the motor vehicle. We have the qualifying amount qualifying amount. We have the investment allowance. Then we have our residual value. We have our residual value. All of this we quoted the zeros, but we included them. So we will not put the zeros. We'll just write the shillings to remove because we've already calculated the zeros. We've already put the zeros, so we are going to remove this quoted. Going to remove the quoted zeros. Yeah, so we have the qualifying amount in shillings, the investment allowance in shillings, and the residual value in shillings. So motor vehicle, let's see how many motor vehicles we have. Motor vehicle. So in additional information, we have motor vehicles comprised of pickups to supply soft drinks to the local market. We also have the cost of trailers, which was 1.4 million. And our cost of motor vehicle, let's see. Our cost of motor vehicle. Our cost of motor vehicle is 6.2 million. So motor vehicle 6.2. $6.2 million, and so we have our motor vehicle. Our motor vehicles, which is 6.2. 6.2 million, which is our qualifying amount, and the motor vehicle has an allowance of 25%. So we are going to get the 25% of our qualifying amount. 25% of 6.2. We have 1550,000. 1550,000. We less our qualifying amount, 62. 4650,000 is our residual value. So our investment allowance is going to be 1550,000. We go to the next asset. Our next asset is motor vehicle. We also have the cost of trailers. Okay, we have given the trailers from the notes. We are given the trailers 6.2. I wrote this here. 200,000 of motor vehicle. The trailers were what? The trailers were worth 1400,000. So we will less 14. 1400,000 from the motor vehicle. So we will remove our motor vehicle. We will just start adding from the additional information. So we will check from the additional information the cost of trailers. The cost of trailers, so we will have 25% of 1400,000. 45%. Sorry, we will have 25%. 25% of 1400,000. So our investment allowance is 350,000. 350,000. So we less, we get our investment residual value. Our residual value 1050,000. Yeah, so this will be the cost of trailers. So let's see for motor vehicle. Yeah, our motor vehicle. Yeah, our motor vehicle. Here we have our motor vehicle 62. Let's less this. We have 8 for 48. 4,800,000. 4,800,000. 4,800,000 we multiplied by 25%. We get 25% of 4,800,000. 1,200,000. We get our 1,200,000. There is our investment. Sorry. So it's not our investment allowance yet. So we will check the cost of all the motor vehicle. So in our question we have motor vehicles, which is here. Then we have the motor vehicles, which is also comprised of pickups to supply soft drinks to the local market. We also have the trailers. So we are going to take the total investment allowance of motor vehicle. We'll calculate it down here. So we'll have zeros here. 15,50,000. This will be our investment allowances on motor vehicle. Let's continue. We have we forgot. We have trucks and trailers. Trucks and trailers, they are also part of the motor vehicle. Trucks and trailers. Trucks and trailers, they are also part of the motor vehicle, and we have them at cost 9,200,000. 9,200,000. 9,200,000. We have 25% of the 9,200,000. 25% of 9,200,000. 2,300,000. We have 2,300,000. 2,300,000. And we add. Let's check if we have another motor vehicle. We have trucks and trailers. We have the pickups of motor vehicles. We have the trailers. So we've already included them. So we will not have any other motor vehicles. So we will add up. We will add up what we have. We will add up all this. So we have our 3,850,000 on motor vehicle. So this is our investment allowance on motor vehicle. We'll continue. We have the computers and softwares. Computers, our next asset. Computers and softwares. Computers and softwares, we have the qualifying amount. Yeah, let me not continue repeating. Over here, we have computers and softwares, of which we have we have photocopier. We have photocopier at 140,000. Photocopier. Photocopiers. 140,000. This is our qualifying amount. We take. We said computers and softwares also take an investment allowance of 25%. Investment allowance. Then we have our qualifying amount in shillings. Then our residual value. Value in shillings, also in shillings. Yeah, so 25% of 140. 25% of 140. 25% of 140,000. Our answer is 35,000. 35,000. 35,000. This is our investment allowance on software. So, my good student, we need to calculate the residual value of all this. So that will be your homework. We take the qualifying amount. We take the qualifying amount. We less the investment allowance. Investment allowance to get the residual value of the investment. Residual value of the investment in the business. So our photocopiers, we also have some other computers and softwares. We have computers. We have computers at 400,000. Computers at 400,000. 400,000. So we take 25% of 400,000. 25%. 25% of 400,000. So 100,000. 100,000. 100,000. 100,000. So let's not incorporate the finishing lines. We finish first. We have 400,000. We also have other computers. We have calculators at 60,000. Calculators, which cost. Let's confirm. Which cost 60,000. Calculators, which cost 60,000. So we are going to multiply our 60,000 by 25%. 25% of 60,000. 60,000. We have 15,000. 15,000 is our investment allowance. Investment allowance. So on computers and softwares, we are going to add all these investment allowances. Let's write them with 100,000. We have 15,000. 15,000. So we have 0. We have 150. We have 150,000 as our investment allowance on computers and softwares. Investment allowance on computers and softwares. We also have some furniture. Furniture and fitting. So you've seen how we've done it. We have our furniture and fittings. Furniture and fittings. We have the qualifying amount in shillings. We also have the investment allowance of 10%, which is 10% on furniture and fittings. We also have the residual value in shillings. Going to put them in shillings, and let's check the amount, the qualifying amount of the furniture and fittings. We have visitors' chairs at 5,600. Visitors' chairs at visitors' chairs, they cost 5,600. 5,600. So 10% of 5,600, we get it's 50, 60. So this is our investment allowance of visitors' chairs. We also have file cabinets. At 680,000. We have our file cabinets. 680,000. And the investment allowance, we have 10% of 680,000. So we have 6,800, which is our file cabinet. We will come here and add up the investment allowances on visitors' chairs and file cabinets. So we will add up. We get 11,860, which is our investment allowance on furniture and fittings. So my good students, that is our investment allowances on all. So we forgot to include the LCD television on softwares, photocopier computers. LCD television should be here. LCD television should be included in the computers and softwares. So remember that we need to include it. LCD television at 80,000. So 25% of 80,000. We just do the calculation, then we add it up here. 25% of 25% of 80,000. We have 20,000. So we include our 20,000 here. We will have 170,000 as our investment allowance on computers and software. So Any other asset we've not mentioned? We have factory building. Oh, this was our factory building. Factory building. Have it there. So we have factory building. We have plant and machinery. We also have file cabinets. We have photocopier, motor vehicles, LCD television, visitors chairs, trucks and trailers. We also have the computers, labor quarters, parking bay. We have the non-processing machinery, non-processing machinery, calculators, water pump, and we have the motor vehicles. So basically, this is how we tackle a question on investment income. So what is important is that you need to know the qualifying amount and the investment allowances, and also you calculate the residual value. So our figures, the investment allowances, will help us to get the residual values. The residual values, all of these are our residual values. So they are our allowances which will help us to get our residual values. So as a student, we need to know the formula, the qualifying amount, we less the investment allowances, then we get our residual value. So my great students, as you calculate the residual values over here, let's make a point of tackling more and more questions on the investment allowances due, So my great students, thank you so much for your time. Let's meet on our other lesson. Bye bye.